Hello and welcome to the very first episode of Honest Majority by Common Prefix. In Honest Majority, our guests give us new insights about blockchain and trust technology. And today we have Alex Evans joining us. Alex is a general partner at Bain Capital Crypto. Welcome, Alex.
Thank you. Thanks for having me. Excited to do this. I was saying this is the first one that I've done in person.
Nice.
I've just done podcasts and stuff over Zoom, and this is a really, really nice venue. I've spent a little bit of time in the space. The energy is awesome. I appreciate you having me.
Yeah, appreciate you coming over to the Common Prefix offices.
Yeah.
So, tell us a bit about your personal story. How did you get started with crypto? How did you get started with blockchains? What was your first kind of exposure to this, and when did you decide to actually get into it?
Yeah, this might be a little bit long and apocryphal. I'm a little bit skeptical whenever people tell their personal stories, just because memory is so unreliable. But so just given that we're in Greece and I grew up here, I was reflecting on this recently, and a lot of it just says I think our generation got a very accelerated financial education. It's like watching CDS spreads on the news and stuff. Grew up in my last year of high school during the crisis. And so you learn a lot about central banking, you learn a lot about economics. I got very obsessed with that. It was a good time to leave Greece and check something else out economically and in other ways. So I went and studied in the States, studied economics. I was just really fascinated by how politically and economically, so the people that you would perceive to be very powerful, politicians, major business people, reacting to these major financial networks. It seems like a trivial observation now, but things like capital flows, capital flight around political decisions, it seemed that those were the things that were really moving the world, and I wanted to understand them. So I tried to study that. Very quickly realized that academic economics was not for me. I came across a couple people building in what was at my university kind of a nascent tech ecosystem. There were some folks messing around with Bitcoin. It was kind of post-Arab Spring, a lot of sort of sovereign technologies and people trying to build for some movements like that. That was very exciting. And so it was really a couple of entrepreneurs that were building it around Bitcoin. So we were trying to tinker around Bitcoin. I tried to help them a little bit to build a social network on top of Bitcoin, very much ill-fated at the time, but I got the bug of these things are exactly manifestation of those financial networks that I became so fascinated with, but in a pure technological form. Through that process, met a lot of investors. I got into investing through that. I just was pitching VCs or angel investors around startups, and it just seemed like a really cool job. It was a very naive take on it at the time. It felt like people would just sit in their chair, and the most interesting people in the world would come tell you their hopes and dreams. And it's turned out to be a little bit different than that. We can get into it if you want, but it was enough for me to get fascinated by it and want to work in the field. So I started out in corporate venture, and I really was a generalist. I looked at a lot of things, and it was kind of, I'd missed a lot of the early network building. So I'd missed the era of the early 2010s of people invested in Snapchat and Instagram and all of that. It felt like nothing was really happening in tech. But from 2015, really until 2020, other than blockchains, really didn't feel like that much was going on. People were talking about things like self-driving cars and AI and bio and just all this cool stuff that's now happening. It really felt that the most promising place of permissionless innovation was in and around the blockchain and cryptography ecosystem. I was meeting really interesting people whenever I would get an excuse to go out to San Francisco and New York. And so really for me, it was more kind of coming from the financial background, publishing work, sometimes informal, sometimes a little bit more academic, and getting to know people in the space. And so through that, I got to know the folks at Placeholder. Joel Monegro, Brad Burnham were at Union Square Ventures. Chris Bernisky was at ARK Invest, and they were starting this new firm called Placeholder. I got to know them just through bugging them, writing, and when they were a couple months into the first one, I decided to join them in New York, and that's how I got into the space. Rest is somewhat of history. We just publishing interesting stuff, meeting interesting people. Very nascent ecosystem still. It's matured a lot since then.
Yeah, and then you moved to San Francisco where we met in the Bay Area. And how did you get into Bain Capital Crypto? What's the kind of origin story?
Yeah, so I co-invested with the Bain Capital Ventures folks. So it was then it is now our sister fund. I had a lot of respect for them. We didn't co-invest in early stage DeFi stuff. In the beginning, I was like, what's somebody from Bain Capital doing running around these early stage investments? That was my now partner, Stefan Cohen. And they were great partners to entrepreneurs. And really what I noticed, as I mentioned, the maturation of the space from this more insular, techie, nerdy, kind of countercultural industry that started in the mid 2010s, really in earnest. I mean, Bitcoin's older than that, to really early 2020 and into 2021, the caliber of entrepreneurs that were coming to the space, the scale of ambition that they had. There were some very early things, like Compound had launched this thing called Compound Treasury that was kind of a hybrid, kind of what's now we talk of the fintech front end and the DeFi blockchain back end. That was the very first inning of that. And it felt like we were at the beginning of a big shift where blockchains and applied cryptography would collide with the world of financial services, the world of fintech. And Bain Capital obviously is a major financial institution in the private markets. And Bain Capital Ventures had an exceptional fintech team. And they were great partners to the crypto entrepreneurs that I'd met. So when they were starting a dedicated fund with a crypto native team, it felt like the best of all worlds. So I joined Stefan to run that effort and moved out, as one does, to California to pursue that dream. And that's where we run into each other.
Of course, but now you're back to New York, and what's happening there? Is it the new center of crypto?
It really feels like, so New York, San Francisco is a boom and bust town. Right now, it is with AI and all the stuff that's going on. And even in crypto, we're seeing a big resurgence in San Francisco. But now the New York tech ecosystem is a first-class tech ecosystem. It was always a first-class tech ecosystem, but it was always noticeably smaller than San Francisco. So when I lived in New York with Placeholder, I had to be in California all the time to meet interesting entrepreneurs, even just focusing on crypto. Now you have to be in both cities. You have to be in New York and you have to be in San Francisco. In crypto and fintech, I think some industries like that have a strong concentration in New York. I'd probably guess that there's more entrepreneurial activity net by number of new company formation. New York is ahead. And we all just wanted to be in the same place. We had the two offices, we would travel a lot, and we've decided to co-locate the firm. We love whiteboards, as I think I've noticed walking around our office, you guys like too. And we haven't been able to replicate that over Zoom. So I'm really excited for our whole group to spend more time together in person. And for me, it's a little bit closer to here, to home in Greece. And I turned 30 in 2023. And since then, the number of weddings are hitting an all-time high. And so my need to be in Europe and in California now, it's a good hub to be in transportation-wise, New York. So that's a positive personal part of the transition. Which is great. Yeah, I get to see more of you guys if you'll have me.
Of course, yeah, anytime. So you're both an investor and a researcher. I think you spend your time between the two. Maybe you split your time between the two. And I also wanted to maybe ask you about what research excites you recently. And I heard you're working on ZKDA. And I'm curious, what does it stand for? What is it?
Yeah,
why are you excited about it? Yeah.
Yeah. So, there's this thing of like you sort of figure out ways to blend your personal and professional interests. And that's been one for me where I discovered more mathematical approaches to the space I was working on from a research standpoint. I met a lot of friends through that. It was mostly from the financial mathematics lens first. And that's how I met some of the folks I work with now. And actually a lot of early stage investments in DeFi and the like that were sort of what I was doing a lot of in the 2018 era was through that. So I just personally loved it. I was just very curious about it. And, there's just something really amazing about doing things you love and publishing them on the internet and people find you and you meet people. That's been it. And so invariably it's collided with investing because I've met a lot of interesting people through that. Sometimes those people are folks that we can hire into the portfolio. Sometimes they're founders. And that's really been the story of how those two have collided. We can get into ZKD. I know I saw you had something to...
Yeah. What is, this is also one of our conversations, I think, when we hang out is always, between investment and research and like very technical and very like visionary. So it's always between the two. But I'm curious, what are you working on right now on the research side, on the technical side? And you mentioned ZKDA.
Yeah, so this one is more recent work that we've started publishing. And we started getting into more adjacent areas to cryptography, I'd say maybe in 2022, 2023 as a group. And it was more just trying to understand what was going on. Like some of the stuff sounds really magical and very cool. And we just wanted to demystify most of the field. So we were just studying it and trying to rewrite it in our own terms. And we did that for a little bit. And then we started to look at just what happens this is how we naturally do research at Bain Capital Crypto. We will find a field, we'll study everything that we're really curious about, we'll meet a lot of people, we'll read a lot of the core texts or whatever is being published, and then we'll try to rewrite it in our own language. And then we'll publish that. And then people will say, well, what's the point of that? Why do that? It seems to be just a trivial restatement of the things. For whatever reason, the next step after that, after maybe a year of wandering, is we'll develop a unique prism on a problem that people are looking at in the industry. And that will lead to us hitting a vein of research up until we publish a couple things, diminishing returns hit, then we move on to the next thing. So broadly, the world of succinct proofs has been that for us over the course of the last maybe 2 years. It's a fascinating, mathematically rich field, great nerd snipe, but with a lot of practical applications to the world of blockchains. Basically, every major blockchain network has been retooling in and around this, and it's a major undertaking for the entire space to leverage these capabilities to enable more efficiency, privacy, all these other things. So as we looked at it, the DA problem was an interesting one. It just by happenstance, we happened to work with this team, Celestia, that you might be aware of, that has pioneered a lot of the techniques in data availability sampling in a public network. And they had just described the problem to us of proving that you correctly constructed a square, which is just your data. The way broadly the thing works is you take a bit of data, you encode it through what's called an error correcting code. And if you have some subset of the data sampled by the network, even if you're missing some parts, people can reconstruct the original data. We can get into a little bit of defining that, what that means, because it's actually kind of mystical to me still. But that's the rough idea. But for that all to work, you need to make sure that you constructed this code correctly. And the way most people had done it historically was either through fraud proofs or some very inefficient constructions. And just by noticing some similarities in what people were doing on the DA side and what people were doing on the snark side, we were able to find a couple pieces of work to propose some constructions that were massively more efficient. For me, personally, the major theoretical satisfaction of the work, I can talk about what it means practically, could mean something, could not, has been we've had this long-standing quest for this holy grail of, can we find an interesting and useful thing for which proving and computing are basically the same. There's no overhead to the proof of the correctness of the underlying object. So I run a computation. I want to prove to you that I did it correctly in a way that, not the trivial stuff where you just rerun the computation, but that involves some proof saving for you. But that I, as a prover, don't need to do any additional work. And ideally, you as a verifier don't need to do any additional work over what you would just normally do in the ordinary course of me giving you the result and me just running the computation in order to generate the result that I give you. And it turns out that data availability sampling, and at least the constructions that are used in places like Celestia, is highly amenable to this exact thing, because a lot of the core techniques that it uses in terms of hash functions and error correcting codes are also the exact same ones that are used in hash-based, like Starks, like proof systems. So that was the main observation. So for me, it's like, here's a thing that people are doing, that people have already predetermined is useful. It's not a contrived example that I made up, where there is essentially zero overhead to proving as there is to computing, and similarly for in a network of nodes that are verifying different things, you would have to be doing the work anyway to verify the proof as you would to sample for data. So that to me was just a very satisfying thing to prove that it exists. Now, does it exist in other domains? I don't know. Does it exist in other useful computations where you can get highly efficient zero knowledge systems? That would be a really interesting practical question to answer. But that was the main theoretical quest that landed us there.
Amazing. So let's go into some of the technical details. So I know from Celestia that they're using the square code, and the square code is used exactly because you want to be able to use some linear algebra to verify the correctness of code construction, right? So you hash by column or something, and then you do some linear operation, and then correct me if I'm wrong here, by the way, right? But now you're saying let's snark it or stark it up, and you don't want to use a generic snark or stark. You want to tailor it to your particular hash functions, to your particular way of combining the code. Does the code change to make it amendable to ZK? Does the hash function change, or why is it really compatible with ZK? What makes it efficient?
Yeah, it's the same code over the same field, and it can be. And it's the same hash function. So it's a lot of these constructions that rely on proximity gaps a lot of the results that underlie Stark's protocols like Ligero that are increasingly popular work for arbitrary codes, arbitrary linear codes, and obviously you inherit whatever properties of the code, distance, and so forth, and whatever properties of the hash function that you use, but you can use a wide array of these things and outcome different properties. So in practice, what you end up doing, in something like a system like Celeste, this was the original, as it's stated, somewhat caricatured in the original 2019 paper of Vitalik and Mustafa Al-Bassam, and I think Alberto is also on there. You take some data, you arrange it in a square. This is your block data. So these are the transactions that will be the inputs to your state transition function in your blockchain. You arrange them into a square. You encode the columns of that square, and then you encode the resulting rows. So you get a 2D construction. The reason for that is if you only did a 1D construction with a fraud-proof system, to prove the fraud, you would have to be able to download the whole data, which by assumption you can't do. So the reason they did it that way is you want to be able to just provide a single row or a single column so that a node that has only square root, capacity to download of square root of the total data can process a fraud-proof, quote unquote, efficiently. That's the idea. So in practice, what they end up doing is they end up encoding a bunch of rows and a bunch of columns, right, with an error correcting code like a Reed-Solomon code over some suitable field, and then hashing and committing to the result. And if you naively try to prove the correct construction of this square and the resulting hash, you could take that, put it inside of a hardcore ZKVM, RISC-0, whatever it is, and generate a proof that you did that correctly. Of course, that'd be very expensive. You'd be hashing a lot in circuit. The code wouldn't be that bad, but it's still a lot of operations to prove. You'd be paying for the full overhead of the VM. But if you look at it a little bit more carefully, what would you actually be doing when you were doing that? You would take an arithmetization of the hash function, or if the codes are doing, you have to compile down to something like a set of arithmetic constraints. And eventually what would come out is you would, from a computational standpoint, do a bunch of encodings and a bunch of hashings. And then you ask your verifier or whatever fiat shamir or non-interactive thing you would do to open up that code in a bunch of places and generate Merkle openings. And then you check those and say the proof is correct. Well, that would be kind of silly because you've already done a code and you've already hashed the thing. So why are you doing it twice? That was the first observation, is can you leverage the fact that you're already encoding something and hashing something to prove the correctness of that same object that you're dealing with? And that was the first. We just noticed the similarity in the techniques that were being used in one area and another, and it turns out you can't. You don't need to do any additional work over what you would do in the fraud-proof scheme, or a very marginal amount of additional work involving some randomness and so forth, so that everything is good and you can prove soundness and all that. And that was the original work, which we called zero overhead data availability, kind of in a provocative manner.
Right, and so that brings down the communication complexity from a square root of n to constant now, is that right?
So the communication complexity still per node would be still square root of n.
Okay.
So you would still be expected to process full rows and full columns. Now, in some of the fraud-proof constructions, it can be lower than that, just because you can open individual elements. But in the worst case, when you're processing a fraud-proof, you still need to open up a full row, full column. So it's not smaller. It's just that now you don't have to rely on a supernode in the sky to prove correctness. And it's also the case that so you can get a higher security guarantee. It's also potentially the case that you can utilize this for all kinds of crazy scaling things where no one validator needs to download the whole block and all this sort of stuff, which are secondary explorations we don't really talk about much in the work, but have turned out to be of interest to folks that have interacted with the work.
And you're looking to publish this as a new paper?
So we published this. We published at the end of last year. It's called Zero Overhead Data Availability ZODA. We published the follow-up work, which leverages the fact that you can have openings. Like essentially what a DA scheme is doing is it's opening a polynomial at a bunch of points. And what a polynomial commitment scheme does is it opens a polynomial at a bunch of points. And so the question is, a lot of snarks that prove correctness of the state transition function, then at the end of the day, need to open up the inputs to that state transition function, the encoding of those at a bunch of points in their polynomial commitment. But then you already need to do that in DA. So again, like, why use it twice? It's kind of a very similar trick to the first one. So we published that. Some of the things that we're looking at now are schemes like the one that I just described, where you can combine the DA part and the polynomial commitment part, are particularly useful in cases where you can parallelize a lot per account, where you're only dealing with one account at a time and you have what's called a data parallel computation. It's a very similar observation, for what it's worth, to the one that the folks, your friends at Pod, have made with respect to you can get very interesting properties if you don't need full sequencing, right? So things like social media, where like I like your post, I just only need to increment that counter. I don't need to sequence everything. Or payments, things of that nature are highly amenable to this very efficient way of proving, not for DA, but actually for computation. And it's also the types of things where you're able to get really interesting properties from a consensus standpoint. So in terms of exploration, that's, I think, a really fertile and interesting area to look at why it is that if you think about from first principles what the problem is and how you're trying to solve it, that you can get much more efficient construction as opposed to just using the generic hammer of general consensus protocol or general ZKVM. It's a very similar spirit of observation, I think.
Great. We'll put the paper links in the show notes. And then let's maybe shift gears a bit and talk about the future. So you talk to a lot of founders, you talk to a lot of people in both in your portcos as well as, I guess, people applying for funding, right?
Yeah.
So what do you predict to be, I guess, the hot thing next year, 2026? And maybe also a prediction for the next 5 years. What should we be looking at? What should we be inventing? What's the interesting story for the year?
Yeah, for me, there's a long wish list of things. I will say it's an interesting time in the space, and I think you and I were talking about this when I came to hang out on Wednesday around the office, is there is something obviously working in the space. That's a new thing. A lot of it was hopes and dreams up until now, and a lot of folks believed, but now we're talking to institutions, and that's a lot of the growth, the durable growth that's being driven right now that we see is coming from players recognizing the usefulness of the underlying technology. Stablecoins are one example of that. Of course, there are a couple earlier stage ones. And that's driving a different type of growth to what we've seen. It's a different type of entrepreneur that's doing that. I mean, in some sense, we founded the firm around that idea that would happen eventually. Those collisions are now happening. And so that's a very obvious area where we're seeing a lot of growth. In terms of, okay, let's say mission accomplished on that stuff. So a lot of work to do, but let's assume over the next few years, mission accomplished on that stuff. I was really attracted when I got into a lot of the interesting mechanism design that was happening around how do we organize ourselves around public goods, and a lot of the early Vitalik posts around, these are very, very interesting structure, how we do voting, how we do taxation, all these things that the space has talked about for a long time. There's not really any products around it right now, but it's always been a big part of how the space has been attracted very interesting people from all kinds of scientific disciplines. I'd love to see us resuscitate some of the work in those areas. I haven't met really many companies that are in and around that. It's just a personal desire. It's just one of those things that really struck my curiosity around 2016, 17, 2018. And I'd love to see more of that work again. And realistically, look, the promise of DeFi has yet to be fulfilled. There's a lot of very interesting mechanism design you can do just from a financial standpoint, but we've been constrained on the quality of the assets that we've had available. So crypto native assets have had historically a ceiling. They're somewhat volatile, they're maturing, they're becoming higher quality themselves. But now there's also this influx of assets in the form of stablecoins, which are of moderate quality as assets, depending on the stablecoin. Of course, they don't have interest. There's other issues with them as assets. But then some of the real world asset work that's happening could potentially be another source where this spigot opens in terms of high quality assets that can be consumed by DeFi protocols. And that's where a lot of the interesting theoretical work and more research that's been done over the years actually becomes useful, because you can have a great mechanism, but if it's being consumed by low quality stuff, it's not really useful to anyone. So we could see a resurgence in very interesting protocol and product design, really, where it stops being about pure research and more about building real products that people love and use, either in an institutional setting, a retail setting, or whatever it is. So I would love to see more of that as we get.
So what's the biggest challenge to getting there? Like, how do we break into?
Look, honestly, these are big markets, and you've been talking to some folks from that world too, and they're slow moving. And there's some periods of time, like the last few years, and definitely this year, post-election in the US, but actually even 2020, basically 2024, people don't talk about this a lot, but every major fintech and a lot of major financial services institutions launched real products. This wasn't, we're doing a private blockchain pilot of yesteryear. This was, we are launching a real product, and we have people who are motivated to build big things, that are staking their careers on this, that are doing this. That was before the election in the US. And then post-election US, the regulatory environment's been changing, though dynamic. And we've seen even more of that over the course of last year. So there's more movement, but you know, you've been in the space long enough to know that there's times where things move faster, and there's times where things move slower, like in the aftermath of FTX. A lot of these things got put on hold. And so it happens where there's ebbs and flows, but overall the trends, it takes time to build the trust, to build the resilience of the infrastructure. I mean, we just talked about ZK. If you talk to folks in and around where they actually deploy cryptographic systems at large scale outside of blockchains, they're very skeptical of ZK VMs all the time. They should be, right? This stuff is really early stage, kind of crazy tech that people are working on, and it will work out. It takes time to get there. So it takes time to build the trust, it takes time to build the relationships. They need to see success from others before they move. It's a much higher risk aversion. You don't want to get fired by dumping a whole bunch of crap on some random blockchain and you get hacked. You know, there's just all this stuff that some of it is time, some of it's obviously efforts, educational efforts, and honestly, products that work are the main one. And once they see it working and they see people making money from it and customers being delighted by it, that just is this call to action. That's obviously what's happened around stablecoins, where you've seen this massive mobilization. Is there's a real product that's in market that people can see. They can see the cash flows associated, and they can see the use cases, and then that creates mobilization. So that's the most likely path.
Very exciting future. Alex, thank you so much for joining us. It was great to have you
Thanks
here.
for having me. This was really fun.
So that's all for this episode of Honest Majority, and we'll see you all here next time.